Okay, welcome everybody. My name is Mike Hamilton from Trade Easy Way, and just taking our usual weekly walk around the markets. And so we're looking at the Dow. I look at the Dow the most often of all the indices, even the US. So you can see we have had this 1, 2, 3, 4, 5 wave to the downside, which has taken us into this ratio extension here. The minus 127, and that's taken from that range there. So once we broke that way, we gapped down and then pretty quickly turned around. You can see the RSI, Relative Strength Index, was extreme down there, and so we've since done a 1, 2, 3 wave corrective bounce. So this level here is pretty much the start of the next series. So if we hold here and push back up, then we can count a 1, 2, 3, 4, 5, or possibly even 5 wave move up here. But if we subsequently start closing down here, we can then count waves to the downside and potentially all the way down to 34k. Which way are we going to go? Well, I think we have started the earnings season with Goldman Sachs today before the open, and so if I would even start to consider the next directional move here from the close of play today. This week on the data front, we've got UK jobs tomorrow and UK inflation Wednesday, and US retail sales on Wednesday. And the day after Thursday, we've got, just before Europe goes away for Easter, we've got the ECB with a predicted rate drop. Alright, so if that follows through, then watch for a close above 40,000, roughly around the 40,000 level. This purple line is the Friday close. So whichever way, that's for my day trading purposes, whichever way we hold around that Friday close is key for me. Let's cut across to the other indices. Let's look at the Nasdaq. Pretty similar story. Gap down, held, or it push higher, pull back, push higher, and here we are. We've gapped up, we're closing the gap, gapped up from the Sunday Asian Open, that is, and we're just holding the Friday support, waiting to see if we can hold that into the close and see if that's going to do anything. So at the moment the markets are fairly neutral in that we are pretty much not far off where we started with. We are under, but we're not far off the start of the Liberation Day, 2nd of April tariff day. Okay, so that was right up there on the Nasdaq at 19,860. We had a very big push there on Wednesday, and we're waiting to see if we can hold this. Excuse me. Wait and see if we can hold this today, and follow through it for the rest of the week. Quick look at the dollar, and then we'll move straight into stocks. Dollar is very weak, so at the moment that's supporting this push up in the indices. So any major strength in the dollar could tip the markets over. Let's just look at TLT, because what brought Trump back from the brink last Wednesday was this. this huge drive higher in the we've got a push up in the bonds, and they just fell off. Now when bonds fall off, it means the yields go higher. So in other words, what was happening here was the cost of servicing the 36 trillion debt got very high with these very weak bonds. So if these bonds pick up from here and push back, that's healthy for the markets as well. So a weak dollar with stronger bonds means the yields will drop. So the higher, as the bonds go up, the yields come down. Inverse relationship. That's good for the markets, because that shows that there's more stability in the government borrowing, the Fed's borrowing, and there's potentially more stability in the markets. So just something just to be aware of. Talking of which, let's just look at the gold. So gold's had a huge push up from the 9th. Found this support from the Feb 25 highs, and we are not far off the all-time highs. So this extension is acting as support at the moment. If we close under 32k, then expect this to really pull back quite hard. So we're just on the brink here. So we get a lower close here and close underneath that support. We stay underneath that triangle. I can see this dropping back quite hard. If we pull back into say 31.68 and turn around and close above that 31.90, 3200, then expect this to go higher. But we're very vulnerable up here. We're divergent, and the divergence is showing itself in the lower high in the RSI. So even RSI can show you divergence, not just MACD. MACD is not divergent. The MACD is higher on this higher high, but this is a critical level. On the face of it, it looks as if this is potentially done, but be aware, this is, as you know, it's an incredibly bullish market. I would not short the gold. I would just lock in profits, or think about what profits you may or may not have if you have been sitting in gold longer term. Right, let's start getting into stocks. One final thing, let's look at oil. So I'm switching around here. Let's just look at oil. So we've got a weak dollar with a weak oil. So that shows relative weakness in the oil. So the reason why I'm looking at this is because I'm just going to look at a couple of oil stocks. But if the dollar is weak and the oil is weak, normally it's a divergent relationship. Weak dollar means strong oil, strong dollar means weak oil. So for this to fall off when the dollar is that weak, if we suggest that these highs are selling, and if we break 55, I think we're going to see 50 pretty soon. Who knows, maybe even lower. So if you're in oil stocks, be careful, because we've broken by dropping under 64.50 here on the 4th. We are very weak. This is a bearish, potentially a bearish consolidation to me. You might well see another touch of 65, but that's, or even higher, 66.5 or more. But once we reconnect with that 50-day average, at some point here, I think we will go lower and break that support and potentially break 55. Okay, so we've got from this high here, we've got a series of lower highs, retracement, breakdown, severe drop and these pullbacks, so there's a bearish consolidation, these pullbacks are potentially going to drag that oil all the way back down. That's the normal process of an unwinding of any market, stock, commodity, whatever. Okay, so let's go and find some stocks now. BT has got real relative strength. We saw 174, we pulled back to 149, and here we are at 165. So the high of December 24 is 159. If we come down and touch that again, I think that's viable, and I think we can see 179 plus. But to do that, we've got to close above 170. If we fail there and start closing lower, then watch out, that might come back on itself. But at the moment that pullback is bought. Let's look at Vodafone. Let's keep to the same industry sector. So prior to the Liberty Day, we were 75, 76. We pulled back to 62.40. So this looks viable. We're under the key averages, but we're closing higher. Volumes is dropping off some, but if you're interested, 67, 65, 67 is a pullback. Close above 70, and then I think we can start to climb back. But be wary. We are seeing, as you know only too well, seeing a lot of volatility. Failure if we push into 70 and then close lower, and then subsequently close on 67, this could roll over. But Vodafone's been doing well. We saw this lovely pickup and breakout. So we broke up, pulled back, kissed the trend line, and then went on a nice move into that resistance. But 75 is obviously a tough number for the Vodafone, and but it is at the moment a good recovery stock as we speak. Moving across, let's look at something like EasyJet. So with weak oil, you would expect the airlines to do well. So we, at that £4 mark, we came down to the August 24 levels. We still can't get through these averages, so just be a little careful of EasyJet. We'd need to close above 475, 490. Any subsequent close above 5 could open the gates for another test of 577 and potentially 625. But any market that can't get above an average, be careful. But if you're in it, we were divergent, so we had a higher low of the RSI on EasyJet. Once we came down to that level, we've broken up through this little funnel pattern, and we are just attempting to stage a recovery, but this recovery needs to get above these levels here. So if you're interested, look out for 450. You may even see, who knows, if things get a little tough, you may see a complete move of retest of 440, but at the moment I would envisage 450 holding. If you're interested in EasyJet, manage your risk as you should be well aware, and I'm sure most of you are. Right, I'm going to start flicking around a bit now. I was in this Advanced Medical Solutions. This is a growth stock, not a value stock, and we've dropped hard into 177. We are trying to pull up here, but the volumes, I've not gone back into this. So I dropped it once we broke these levels here, pulled out with a tiny profit, but we're holding on very small volume. Whoops, I didn't mean to do that. That's annoying. So just be careful. I do not like stocks that pick up on low volume, and also the price is under the £2 mark, so with the averages above us. So every time you've got a moving average above you, for each moving average above you, it's at least 10% lower probability. So with 20% lower probability with the 50 and 200 above us, lower, that this could fail here and drop lower and break this 165 and come and find some lower numbers. Alright, so I've not fallen out of favour with this, I'm just cautious about this one. Right, let's go through IQE. Yeah, I am in IQE, taking a little bit of heat, but with a speculative stock like this, I only take small positions anyway. Yeah, I mean, the IQE is concerning. We had a decent close on Thursday the 10th. Volumes are, in relation to their norm, weakening over the last couple of days. So if we come and test 850 and close lower, we had it. I'm out. We might well do a retest of 850. You bought today at 950, right? Good. So we might well do another test of that 8.5. But if we can anytime soon close above 10, then I think we can gather a pace. And not that long ago, we were 18.5. So last time we did this, we did a swift 5-wave pattern up to 18.5. So it's just a question of whether we can come off of this low level, find some more volume, and then go and find some higher numbers. Otherwise, break that 8.5 and I'm out. Okay, so I'll come to that one in a minute. Right, let's go through my main ordinary list. Let's look at a couple of banks and so on. So look at Barclays. Wow, so it's fallen right at 224. Yeah, that was now obviously I've slipped up a bit here because that should have had this marked. The 224 is a support zone. We closed higher the next day, so we did a 1, 2, 3-way correction up into looks like above the £3 mark, and here we are down at the 255. Volumes have improved, so on the basis of this swift move up here, I think this is buyable. I'm going to look for 250. If we can come down to 250 and hold, stop under, I'm not going to give it a lot of room, I will go under 230 and see if we can hold here and pull up into £3 plus. Alright, why have I got that price there? Hang on. Let me redo these ratios. Just tidy the whole thing up. You can see here on the averages, we're holding the 200 here, and this is the 50 above. So if we can close up here, 290 plus, we get a golden cross, a very bullish golden cross. Let's just look at this. So we closed on 50% here. So there's your 250, 260 area here, support. So we need that to hold. So any close under 240, and this is toast, potentially toast. Any pullback to the 200 average at 250 and hold, that's very bullish, and we could go and see 340, 380, £4. All right. Sticking with financial services, this is Wise. This is a very old fibs. Let me update this one as well. So 880 is the key number here. If we come and hold that to that 880 and hold, I think this could go back to 1140 and then go and find 13 and potentially longer term 15. Look at this huge move. These guys have a payment system. They have a huge cash pile. Well, this is Wise, W-I-S-E. Keep an eye on this one, because if that pattern holds, we can break that £10.40, then I think that one could do well. Right, I'll move faster now. So legal and general, that's a very swift move off those lows. That looks viable at 225, 230. What else have I got? I've got, this must be Aviva. Very similar patterns. They connected with the 200-day average and pushing up. Phoenix, that's done very well. That looks higher. I would want to see 530. It's up there at 562. That's financial services. Oh, this is Schroders. This is good. This is looking good. And I'm going to look at Close Brothers in a minute. If that chart pattern holds, volumes are improving. They're not great. If we hold £3 and close above 335, I think they can go back to the highs and beyond. Step back from that and you can see how important that is. If that closes under £3, it's potentially toast. Right, Close Brothers. Close Brothers in particular, I'm not sure about Schroders, but Close Brothers are definitely caught up in the car loan commission issue, which has dragged this one right down. I've been holding out for 245. We saw 250. I might have been missing the boat here. I'm still going to hold out for that 245. I'm going to be patient with this one and see if we can do a full retest of that 21st of Jan. If I'm wrong, this is going to start to close above £3 and then recover. It's come from a great height. The question is this all priced in, and is this one ready to pop back up and start to recover this, or is the market going to yank this down again? So I'm waiting for 245. Right, let's look at some RSW. That's a potential recovery stock. I've forgotten what RSW look. I'll have to go and revisit this one. So that's come down there at extent. This is a potential extension and reversal. Volumes are beginning to pick up. RSW, I need to go and check that one. Let's do some more research on it. I haven't forgotten your SSE. I'm just going through more. QQ. That's picked up as well. Pension B. That's a sweet move. Okay, you get the picture. These are all we're seeing very familiar patterns across these different sectors and stocks. CNA. So before I look at SSE, let's look at Centrica. So Centrica's pinged back to 137. Volumes are improving. Let's look at this latest range. Yes, it's gone right into that ratio support 138. If you're interested in this one, I would suggest you be patient and wait for that to fall back into that. Wait for that to retrace a little bit more into 140. Right, now let's look at SSE. A competitor of Centrica. Yeah, very familiar pattern that we're seeing across stocks after this Liberty Day drop. So we almost tested 50% on that high of the 4th. We've pulled back. So we've got this very similar support pattern down there. Volumes are healthy. So if we can close above 1575, we've got a gap at 1611. That looks good. If we can subsequently close above 17, I think we'll see 1784 and potentially wind our way back to the highs. This time last year, this is what we did earlier in the year last year. We had this pretty much the same pattern. So we appear to be repeating the February-April pattern of last year. So cyclically, this is a good time of the year to get into stocks like this. And let me continue this. We've looked at IQE. Let's look at the commodity related stuff. FCX, the American copper miner, recovering well on decent volume. That sees 31 again, that's a buy on the American copper. Let's look at Inchcape. This must be Inchcape, a decent pattern off of 625. That's a pullback if you see 660, 662. The potential to wind back to 860. I do like commodity related stocks. This is a cheapy oil stock, Tullow, struggling. Let's look at Hunting. Bear in mind what I said about weak oil. Yeah, and that's struggling. That's really struggling. That's not a reversal signal. So things like Hunting, I am avoiding. Right, anything else you want to look at? Let me just... Now this is a good one. I talked about this one last week. This is Renew, I think this is RNWH, I think it's Renew Holdings. Let me just go and check. Yeah, it's Renew Holdings. That is a very healthy push higher there. Volumes are improving. I think that's well worth. If you see 650, I think that is a potential recovery stock. Again, we're not far off. Not that long ago, we were 1130. Let me just check my other ones. Foresight. Yeah, Foresight's a good move. Didn't look at Prudential. Prudential's done the same as so many stocks, pull back into support and pulling up. That closed at 757. That's a pullback at 725. Okay, so seeing the very similar patterns around these stocks. So to recap, I'm interested in Barclays on a pullback to 250. I'm interested in Centrica on a pullback. Interested in Inchcape and Renew Holdings. Alright, so a quick look at some bellwethers out there, some US AMD. That is a massive reversal signal there on the 9th on AMD. Anybody's interested in US stocks, keep an eye on this one. Because if that goes into that support and subsequently comes out, so I would still hold out for 87 on AMD. What else? I think I'm going to leave it there. Alright, no more questions coming in, so I'm going to say goodbye. Thanks for your company, and look forward to some updates in the Telegram room. If you're not in the Telegram room, drop me a link and I will let you into that room. Thanks very much. Bye for now.